Good morning, traders. It's Peter Thompson, Senior Mentor of 1 Billion Signal, sponsored by Merit Forex. The time has come. Wednesday, Consumer Price Index, inflation report, guys. Very volatile event, and specifically right now, it's even much more important as the Federal Reserve is going to watch closely what's going on with the inflation in order to take a step further in terms of their monetary policy. So, quick recap about the calendar, then we're gonna explain what's going on with the CPI, then we are going to check the charts. We got Monday, nothing much. Tuesday, we got job openings report, 2 p.m. went green, not big impact on the market. And Wednesday, GDP for UK 6 a.m. GMT time, and core CPI 12:30 GMT. Now bear in mind, I want to emphasize on the CPI, the inflation report, because it's very important event. CPI, as you know, is also known as inflation. So every country is running for 2% target. This is the so-called healthy inflation of each country. Right now, the current inflation is 1.6% in United States on yearly basis, and the forecast is to see 2.3%, which is above this 2% healthy inflation. Now, if this happens, simply the Federal Reserve is printing money because they wanted to bring this inflation up, the CPI report up to 2%, and eventually they will cut the money supply. They will cut these printings in order to, in case that the inflation went too much up, too much above 2%. So if we see 2.3% inflation on yearly basis today, we definitely can see in the near future, not immediately of course, but we can see in the near future Federal Reserve is cutting the money supply. In order to decrease inflation, in order to not to overheat the US economy. So I read an article a few days ago that the Americans don't prefer to work, by the way, because they're happy with the stimulus, which is a little bit interesting. But it simply means Federal Reserve strategy doesn't work. We talk about support the US citizens with money. This strategy doesn't work because obviously they also spend the money not for education and etc., but also for things that are not pretty useful, to put it that way. I've heard that Americans are investing their stimulus in shares and stocks and even cryptocurrencies, which is kind of crazy, but yeah, so if this is not working, so then there is a very big risk of overheating the economy, and how this is going to affect the charts, we're gonna talk in about a minute. Thursday, initial jobless claims, 12:30 GMT. Important event for the labor market. PPI 12:30 exactly the same time. GMT again for the US dollar. Governor Bali is gonna give a speech. 4 p.m. in UK, and Friday core retail sales in US 12:30. So let's take a look what's going on with the charts. Euro US dollar, we talked about it so many times. We definitely can see after the NFP Euro US dollar going down. So for now, Euro is pushing down with 40 pips. Everybody is going to wait for the consumer price index today to see is it going to be better than the forecast or no, and simply this is going to give the direction of the US dollar. If we see CPI above 2%, we definitely can see some money supply from the Federal Reserve cut, and respectively speaking, we can see the US dollar rebounding, correcting to the upside. In this case, Euro US dollar to drop down. So I'm not gonna be surprised to see 1.2051, 60, 70 pips away from the current price of the Euro US dollar. Even further down, it's not impossible. Really depends what's going on with the CPI today, what will happen with the CPI. GBP USD pushed up right now, is almost reached the resistance level here. I'm gonna move this level to a new one. Just give me a second. 1.4182. Even we can do it on 1.42 because this is round number, very important resistance level. So crucial, again I repeat, what's gonna happen with the USD. It's not about the Great British Pound here, it's about completely about the USD. Right now the US dollar is in focus, so really depends what's gonna happen in the afternoon. So GBP, we can see a correction to the downside. Anyway, it's not a good idea to buy on the top. 1.40, pretty possible to see 100, 120 pips drop from the current price, and it's a matter of time to see. But this is for the GBP. Australian USD already started dropping 70 pips the last couple of days. We can see slight rebound to the upside, testing the resistance level, and further drop to the downside. The majors could change direction very soon, guys. Again, it's all about Federal Reserve. New Zealand US, quickly to take a look, kind of similar, pretty normal, almost touched the resistance level, dropping down with 70 pips, and in order to go back below the support level 0.7239. So I'm waiting for now with the New Zealand, is not pretty clear. So anyway, I'm not focused on the New Zealand dollar, more likely USD Canadian crude, USD Swiss, USD Japanese, they're much more clear. Exactly the same situation with USD Canadian. Expected correction to the upside, it's pretty normal. Anyway, USD CAD already made its move, 480 pips drop without even a correction, so it's pretty normal to see recovery to the upside, which doesn't mean that this is a good buy opportunity. Don't even think about it, guys. It's very dangerous because USD Canadian is getting very weak, and anyway it's not worth it to buy against such a strong downtrend. Crude, my favorite crude oil, yesterday tried to push below the support, bounced back immediately, as you can see, 63.82. I think it will continue going down. To this drop will continue going down to the in the next couple of days. So 59.80, pretty normal. Again, I'll repeat that million times. I know it's a little bit annoying, but it's very important event. CPI will give the direction of the USD and, respectively speaking, to the crude oil as well. Crude is going up right now because of the weak US dollar, not because of the strength of the crude oil price or the demand. They started talking about again the coronavirus cases. They're getting more and more, especially in the United States. So this could make some troubles to the crude oil. So let's take a look. But I'm looking for huge short trade on the crude oil. USD Swiss, pretty clear. Rebounding from the bottom, tested the support 0.90. Absolutely clear, and it's going up right now with 60 pips from the bottom, and I'm expecting to see this this correction continuing to the upside. And on our resistance we can see even 0.9200 round number is pretty possible, because USD is expected to recover, so careful with the short positions on the USD Swiss right now. USD